Here are your hosts, Patrick and
I
James.
like it, so I can make fun of James if I want. And
Oh yeah, man.
that's
Yeah.
Kick it around.
Yes.
Take it any
You
direction
can-
you want to go. I'll throw it back at you.
Yeah,
perfect.
any direction you want to go, man. We're an open book too here. We're just here to have some fun. So, how's it going, everybody? And welcome back to the Real FI Podcast. I'm your host, Patrick McGrath, with my co-host, James Rippion. How's it going today, James?
It's going well, Patrick. I heard that you recently got back from a fun trip. I'm excited to dig in with that about that with you a little bit later. Hear about how all that went. But we've got a great guest with us today. We've got Sam Primm. Sam Primm has an amazing portfolio underneath him. He's been managing a lot of real estate, and he's been doing some really creative things to get where he's at. And I think he's going to bring a lot of actionable, great real estate tips and tips just generally for financial independence. So let's go ahead and get into it. Sam, tell us a little bit about your business, what you've got going on in real estate, and what you got going on in your field.
Yeah, for sure. Appreciate you guys having me on. So I'm a real estate investor. I'm an ex W-2 employee. I kind of walked that path of, full-time job, real estate as a side hustle, real estate as a full-time job to financial freedom. So I've kind of walked that path over the past 5 or 6 years and been journaling and, going through my journey and putting it on social media over the past couple of years. And people seem to be interested in financial freedom and controlling their future. So that's been really fun. Flash forward to today, I have a little over $40 million rental portfolio that I've been able to buy entirely using other people's money. I'm sure we'll get into that. I have a house flipping company in St. Louis. We're going to buy and sell. We do some wholesaling, some flipping, about 325 houses this year. And then I also have an education brand, Faster Freedom, that has a couple million followers on social media between all of them, and then a podcast as well. So I'm all real estate. I don't, talk about crypto or NFTs or e-commerce, even though I have quite a bit of money in crypto and some e-commerce stores and things. I'm all real estate. That's all I talk about. That's all I teach. So excited to dig into that.
Yeah, man, absolutely love it. I mean, for everyone out there, I'm sure that's in the real estate space, it's in the financial and independent state space. They've had to come across one of your reels or TikToks or YouTube videos over the last year and a half. I felt like every time I opened my Instagram or Facebook, like there was you, just talking about your journey over the last like 5 years. So I'm so excited to dive into it. And I really want to just kind of rewind the clock a little bit and, talk about what really got you, inspired to even start the real estate journey. Like, what was your W-2 and when did you start taking that leap into real estate?
Yeah, so my W-2, I was selling Caterpillar construction equipment, and then I was a sales manager. So I kind of worked my way up in the construction equipment industry, which is nothing I grew up with. I just kind of happened to get that job out of college. I graduated college in 2011 when not a lot of people were hiring. So I just kind of took the first job that I was offered that I was somewhat interested in. So I did that for a few years. In 2014, 2015, started investing in real estate on the side. I don't have some like epiphany moment. I just knew that 90% of people or that millionaires were created through real estate. My business partner and buddy Lucas, who owns everything with me, we had done some things in the past. We had, a painting business in college. We dabbled in maybe some not legal things in college to try and make money. So we were always trying to make money on the side. And he had a job that, full-time engineer job. I had a full-time sales manager job. And we decided to try real estate as something that we could do on the side. It's something that, you can get into. The barrier of entry is pretty low to get into real estate game. So just kind of decided to dip our toes in the water a little bit there and started off with, buying some properties and turning them into rentals. And in 2018, we both quit our jobs and went all in, and it's kind of been gangbusters since then.
So tell us a little bit about where you were at in 2018, because a lot of people go through that mental process, of course, wanting to get into real estate to reach some sort of form of financial independence. And it sounds like you're able to do that relatively quickly, or at least feel comfortable enough to be able to leave and transition from your W-2 into your business, full-time business, and make it a full-time thing. So like where were your finances with your business and your real estate at the point where you decided it was comfortable to switch out of your W-2 and get into full-time real estate?
Yeah, great question. Because I definitely, didn't just jump in and say, I'll figure it out. I wanted to have a little bit more of a plan and, a little bit of a backbone before I made that leap. So in 2018, I believe we probably had maybe 20, 25 rentals. So a decent amount of rentals, but that's, 200, $300 a door, a month. And, so we were making, a few grand a month from it, but that's not enough to live on. And we still haven't tapped into any cash flow. That's not the plan, is not to make our active income from the cash flow. That's to feed the long-term wealth plan. So I had a backbone of that, but what I really had and what really allowed me to be, mentally able to take that leap was I made a ton of connections with people that were going to sell me houses or bring me houses. So I felt like I had a good pipeline of deals and could continue to cultivate that pipeline. I had connections with contractors. I had several private lenders that I'd worked with over the past year, a couple of years, some hard money lenders, some banking relationships. So I just kind of built a good foundation. And in order to get that active income, I was going to be getting into wholesaling and flipping a little more heavily. I had done some wholesaling, I had done some flipping, but the plan was to go all in on those. I was spending 5-10 hours a week, wholesaling and flipping, was able to do a decent amount. The thought was, if I can spend 50-60 hours a week wholesaling and flipping, I should hopefully be able to get to where I was before, active income wise. And it took a couple of years. I took a step backward, income wise there for a couple of years, but then as things kind of started to come into place and the real estate market had been pretty good at that time, it was a good decision financially and just in general.
I think that's a common theme we've seen with a lot of our guests, is that they've decided to build an active business in real estate. They're, the people who reach measurable amounts of wealth seem to have built some sort of wholesaling, flipping business, and they're not just buying, one single family rental at a time or one small multifamily. They're really doing something to go all in the business and find a way to really generate massive amounts of cash flow that can be reinvested into real estate. So I think that's super important for people to realize, especially, if you're trying to transition out of your W-2, you're not going to have the benefits of being able to sign on a loan, obviously, if you don't have that income to support future acquisitions of real estate. So it's something to be mindful of.
For sure. And even to piggyback off that a little bit, the bankable part of it, you're not gonna be able to sign on a loan. And even if you quit your job and have income coming in, you're probably not gonna be able to sign on a loan with the new bank. So I had developed relationships with, 3 local banks here while I had that W-2 income. And then, quitting that and going full-time, self-employed. So you don't have you don't have recent W-2 income after, 6 months of being a full-time entrepreneur, but that relationship with those small local banks was strong enough, and I had communicated enough that they were fine with funding apartment complexes or funding multiple single family rental deals still, even though I technically was in a brand new small business. I was not, anymore, a W-2 corporation, been around for a long time. So that's the other side of it, is you can develop those relationships and communicate along the way so that when you do make that leap, it's not like, the banks aren't like, we're not going to fund you anymore because you don't have a solid W-2 job. You're kind of out on your own. So that's another point about it.
Yeah, and I think that's huge because what I've heard throughout these last couple of minutes we've been talking is about the team that you built and the relationships that you built before you decided to make the leap. You cultivated relationships with wholesalers, you cultivated relationships with hard money lenders, with private money lenders, with banks, and had already established, successful transactions with them. So once you took the leap, you already had a portfolio of 25 plus rentals. When you took the leap, you were already an established real estate investor that they could already bank on. So it wasn't like you were just like, hey, I quit my job, I want to start, doing this full time. Like, you had already took 2 or 3 years working with these people, building these relationships with, I think a lot of people sometimes don't think about too much. It's like, you need to have multiple people to talk to, multiple relationships that you build. So, when one dries up, or maybe one's like, hey, we've kind of reached our limit, you can go to the other 2-3 people. And I think that's really huge. What kind of recommendations would you give for people trying to build out their team? Like, how are you able to do it? And what do you think, like, one of the top 2 or 3 things that you would recommend people do to start building out that team?
Yeah, great question. I think the biggest shortcut is leaning on people that are already there. If you go to join your local meetups or Facebook groups or just generally connect, asking those real estate investors what banks they use. You can do what I did at first, even when I had the full-time job. So in 2014, 15, when I was doing my first refinance on a property with the Burrs method, I had like 20 banks say no, because I went to Bank of America and Wells Fargo, and all these banks are like, we don't do that at all. We only do residential, or give us your money in your savings account. We don't do, cash out refinances and commercial loans. So, didn't even know what to do even at that point. So, I talked to a local real estate investor, and they said, oh yeah, go to these banks. They'll do 80% cash out, all this stuff. And I went to the first bank that they suggested, and they said yes. So I think leaning on other people is huge. You can try to figure it out on your own, and you probably eventually will, but you can do it a lot quicker, a lot more efficiently, with a lot less headache and a lot less no's, if you just talk to somebody that's already been there, done that. And I think that's a common theme with everybody I know that has any level of success, is they're not vain enough to think they can do it on their own. They're willing to either ask somebody a question and swallow their pride, or pay somebody to get the question answered in order to get the right answer. You don't, most people aren't going to hold your hand every step of the way, but if they can at least keep you out of the gutters and keep you out of the ditches and keep you on the freeway, you'll be moving in the right direction. So number one, I would think, just talk to other people in the space, and you connect with them on meetups or Facebook groups or Eventbrite, or just talking in general, and just connecting with other people that are doing what you want to do, I think, is the most important thing. And the other thing is trial and error. You're not going to, every wholesaler you meet's not going to, you're not going to connect with. If you try to be best friends with 20 different wholesalers, you're going to be best friends with no wholesalers. But I would talk to 20 different wholesalers, and the 3 or 4 or 5 that you connect with, that you are both a sports fan of a certain sport, and you both know that LeBron James is better than Michael Jordan, or whatever you can connect on, and build that relationship, and kind of go out to dinner, have drinks, have you and your families get together, building those 3 or 4 key relationships in each of those fields, and cultivating those rather than trying to cultivate too many, I think is pretty important as well.
Yeah. And I think, do you feel like your sales background has kind of helped you a little bit in your investing journey, your financial freedom journey, you're building these relationships? Because I was in the construction industry for 5 years selling heavy equipment as well. And I was doing all of those things. So it was kind of like second nature as being a salesperson, to be able to kind of build those relationships and go out there and introduce myself and talk to people. But I don't think that is like kind of everyone's kind of background. So what advice do you have for those people that maybe are a little timid, maybe are a little introverted on going out and meeting people?
Yeah, I think that's there's not a problem with that. I think that's definitely something that I feel like there's a couple different options. Number one would be kind of do what my business partner Lucas did. He's definitely, I wouldn't say introverted, but he doesn't love going out and talking to people. So he partnered with somebody. I mean, it's not the reason why, but it ended up being a benefit of it. He partnered with someone that doesn't mind going out and talking to people. And I don't love, spreadsheets and running numbers and analyzing things to the 10th degree, and dealing with all these formulas and equations, and he likes doing that stuff. He's an engineer, so kind of the yin for your yang kind of thing. If you partner with someone that has the exact same skill set as you, then I mean, I guess it's fun, but you're doubling the work, or it's not, you're still going to be holes in what you're trying to do. So I think just having somebody that, if you're an introvert, partner with somebody or hire somebody or whatever it is that is more of that extrovert. And if you're an extrovert, you don't like running numbers, partner with, hire, connect with somebody that doesn't mind doing that. So I think that's the first part that I would say is the easy button, and probably what I would suggest doing. The second part is, you're just going to have to get over some of that. You can't be outside your comfort zone. You can't, if your goal is financial freedom, and that's your goal, and wealth, and passing money down to your great grandkids, you can't do that inside your comfort zone. You're going to have to do things that make you feel uncomfortable. You're going to have to do things that you don't want to do. You're going to have to do things that other people aren't willing to do. It's that simple. Creating wealth and all the success and all these things, they're not really complicated, but that doesn't mean they're easy, right? They're hard, and that's just the way it is. And I wish there's another way, but there's not. So being uncomfortable, screwing up, failing, losing money, that is all part of succeeding. I don't know anybody that's been successful that hasn't failed hundreds of times. So the people that want to stay inside their comfort zone, or the people that want to never fail, they're literally avoiding success. They're walking the exact opposite direction of success. If you're being uncomfortable and you're failing, you are at least in the right direction. So sorry to kind of run on a tangent there, but that's the other side of it. You're going to have to do that kind of stuff. Or just continue doing what you're doing and you'll be exactly where you are right now.
Yeah, well, I mean, most importantly, if you're not taking risks, you're not learning anything. You're not going to get any rewards at any point in life, because you're just not putting it on the table. I want to talk to you about your partnership a little bit. And when it comes to partners, people they're quick to get into partnerships that might not be the best for them. But it sounds like with your particular partner, you've got a lifetime of experiences built up with him, and you're able to kind of vet him over that in contexts that were outside of just business. So, give us some of your thoughts on partnerships, entering into partnerships, things that maybe you do to kind of protect yourself and organize a partnership to be mutually successful for business.
Yeah, that's a good one because I tend to do the opposite of what most people say when it comes to that. Lucas has been my best friend for 25 years and maybe not 25, feels like about 80, but it's been probably about 20 years. He's been really good friends with him. And a lot of my really, really good friends that I've known since middle school and elementary school work for me now. We have 35 team members, and I would say probably 12 or 15 of them I've been friends before they became team members. So everybody says, don't go into business with your friends or family. We're doing the opposite of that. Lucas's brother-in-law, the guy that's married to his sister, runs our biggest company, our flipping company. So we definitely don't go that normal route. And I think what's important is having and partnering as well as hiring out people that have the same core values as you. They want to do the right thing. They have the integrity, whatever you like really gravitate towards, they have those same things. The other thing is having and setting the proper expectation. When Luke and I started with all this, we were saying, our friendship comes first, we're willing to give this a shot, but that will never, that will always become first. And we have that same talk with everybody that we hire that is our friend. So having the right expectation that if you do the right thing, you come to work, you work hard, you act with integrity and within our core values, we'll figure it out. We've had to shift people around from company to company or from job to job just because it hasn't been the exact fit. And that's on us by putting them in the wrong spot, having some accountability there that they're the right person. We like them. We enjoy being around them, and they're not as successful as we would like at this job. So let's move them to a job that fits them up a little bit better, trying to not, put a square peg into a round hole kind of thing. So there's a kind of a lot that goes into that. But in general, I guess it'd be, same core values, culture, and setting the proper expectation and be willing to be flexible. I think is a big part of it because it's definitely not the norm, kind of all of our buddies all hanging out and working together and being successful as well.
Yeah, well, I mean, that sounds pretty awesome to me. And I think, like you said, it really comes down to, setting the expectations. And like you said, putting your friendship first instead of the business first. I think a lot of people get that flip-flopped around a little bit. And sometimes they let the money kind of get in front of what the whole purpose of doing this is for. So you can spend more time with your friends, so you can spend more time with your family doing the things you love to do. And what better way than to kind of helping everybody out accomplish all of that at the same time? I mean, that sounds like an awesome place to be and work for. So that's pretty cool. And I love how, you guys are just making it work for you. And I think a lot of people out there think that there's a formula or, an A plus B equals C type of outcome. And it's not. Like you said, you're going to have bumps in the road. Things aren't always going to work out right. Like you didn't just magically wake up and become this successful. Like I'm sure there's a ton of deals that went south, like you said, that you lost money on, and issues that you've had because somebody slipped up and messed something up and it blew the budget on a job or something, and you just had to get over it and look past it and keep on moving forward. And I think a lot of people just need to realize, like you said, with financial freedom and financial independence and all this stuff, it takes hard work. I think the number one thing is people have to be willing to put in the work. They got to be committed. They got to take the action. Like you can sit here and listen to this podcast, your podcast, watch a million videos, and all of that. But unless you go out there and grind and put in the time, the effort, and the work, like you said, you're just going to end up in the same place a year later.
Yep, I'm with you 100%. I always kind of say, and I've heard it before. It's not like a same original, but I would say you learn, 25% of it from watching. And, the things that I offer and the things that I try to teach people, I feel like are really good because they're based on things that I've done and actual actionable things. But still, you're going to learn 75% by actually doing it. So you can only get so far just by watching.
All right, Sam, I'm going to hit you with a big one now. And I know
Let's
this is what
go.
everybody wants to hear. How the hell did you go from 2018 to about $40 million in real estate, man? Like, take us through that journey and take us broadly through that strategy. Break it down for us.
Well, I started an OnlyFans page. No, I'm kidding. So kind of the journey was, I don't have the exact numbers in front of me, but 2015, my rental portfolio was worth 200 grand, and by end of 2016, it was worth 600 grand. So the $42 million worth of real estate that I own has been about a 7-8 year journey, but probably 40 million of it has been in the past 4 years. And it's been one of those things that it's been that kind of stair step of what I said. It didn't go from 0 to 40 million overnight. So it was developing relationships with multiple private money lenders, and it was developing relationships with apartment complex brokers. I bought a few smaller apartment complexes in 2017 and 18, and then we went 2 years without buying an apartment complex, but we were actively trying to buy apartment complexes. We just didn't have the time to focus on it, and we were sending letters, and we were writing offers on deals and getting outbid. Probably looked at analyzed 150 apartment complexes and didn't get one under contract. But then we decided to focus on it, and we built relationships with local real estate investing, or real estate apartment brokers. So they started bringing us deals first, and we did one, and then we performed and everything went smoothly. So they brought us the very next one first. So it's just one of those things where it's like kind of a combination of things. We had been building private lender relationships, and you perform with those private lenders, you communicate, you pay them back no matter what. Then they tell their friends, and they tell their buddies, and they tell them their, people that have some extra money. So before you know it, 2 private lenders turns into 8. So you got a good backing there. And then you develop relationships with banks, and you make your payments every time. And, you talk to maybe even some brokers that broker Fannie or Freddie money. So it's just one of those things where it's not like A plus B equals C answer, but it's one of those things where over time, everything kind of lines up. Like we bought 42 houses earlier this year in one deal in one neighborhood from a single owner. And that's like cool, but we'd been talking to him for a year. We've been talking to a private lender for quite a while about the deal. We've been talking to a couple different banks, and we couldn't come to terms last year, but then we did this year. So it's everything got to that point, and we didn't have our property management team in place to take over that a year ago. So just building up everything, and every single day all wings of our business getting a little bit stronger, then you level up and you can do more. And then every single day you get a little bit stronger, then you can level up and you can do more. You can't go from 0 to 40, right? You got to go from 0 to 3, then 3 to 8, then 8 to 12, then 12 to 20. So kind of one of those things where it's just a slow build, and there's so many moving pieces that there's not a formula for it, but it's something that if you stick with it and continue to just put one foot in front of the other and try to get better every day, you'll eventually get to, we're hoping to do, a couple hundred, unit apartment deals across the country here soon and fly a private jet to them, but it takes time to get to that point. So.
Exactly. I mean, I absolutely love that, because when you get into real estate and you get into, being financially free, it's a long-term game. Like, we're in this for the long term. And for someone like myself who's looking at this for the long term, I really want to dive back into that private money part for a second. Like, let's just say, for instance, someone like me who's looking to get 500 grand for, a $2 million apartment deal. Like, I've never done private money before. We've all been self-funded. Like, what kind of terms would you be kind of going after or looking for on that, like, first private money deal with someone you're trying to build a relationship with? Because I'm pretty sure they're not going to be as spectacular as you would hope, but that's going to help you get to that next level. Like, what would you say on something like that for somebody like me, or someone looking to get that in that first like door with a private money lender, regarding like terms?
Okay, so don't let me forget I want to get to your question of the 500 grand and like how, because we have structured almost every one of our apartment complexes deals slightly different. So I'm excited to kind of briefly go into that. But what's worked for us, and I think most people, is before that, the private lenders that have given us 500 grand, $1 million, $1.5 million, we had done smaller deals with. We had borrowed 150 grand for a single family deal and, gave them their money back. Or we had, needed an extra 50 grand on a rehab and borrowed that from them. So we started out smaller. We proved ourselves on a smaller scale and then gradually grew from that. Like our initial private lender, I just had him on our podcast actually, and he's done, I don't even know how many deals, probably 60, 70 deals with us to this point. And he started out with a 100 grand line of credit, go get a deal for 100 grand or under off on the whole thing. And we did that. That was back in 2014, 15. And then, we slowly raised it with him. And now he's probably got consistently 1.5 million out with us. So we just didn't jump to that point, I guess is what I'm trying to say. So you kind of got to work your way up. And if your goal is just multifamilies and you're not doing the smaller deals, it makes it maybe a little bit more challenging. But as far as, back now to your question about, the 500 grand, how do you structure it? We've done it a ton of different ways. You can do debt and equity, meaning you can give them just a preferred interest on their 500 grand. They give you 500 grand, you give them 8 to 10% return on their money, annualized, paid every quarter, every month. And then, some type of balloon payment at the end upon refinance or sale. We've done that. We've given partial ownership in the LLC that owns the actual property. So there's a ton of different ways to do it. It really depends on the specific deal. If it's a home run and cash flow super, super heavy up front, then we'll probably give more interest, less ownership if we're giving up ownership. And if it's something that, is not going to cash flow for a while because we have to raise rents and do repairs, maybe we do the opposite. But the goal in everything we do is to get 100% ownership. So the most we've ever given up is, 5-10% ownership on an apartment deal. And then upon refinance, buying them out. So there's a ton of different ways to structure it. And I think knowing your private lender, knowing their hot buttons of what they want, if they want, tax sheltering, or if they want cash flow now, or they're not worried about any money right now, they're going to retire in 2 years and they just want to have a nut at the end of that. Just kind of being flexible and not being rigid, and this is exactly how it's going to go, is I think important for most people, having that initial conversation with the lender, seeing what they want, how they want it, and then trying to structure your deal, because it's probably either you get the deal with their money or you don't get the deal at all. So they're kind of not in the driver's seat, but they're right next to you. So
I've got a question, Sam. Who is selling who when you're going out for private financing, private money? Are they begging to be into your deals? Or are you going out there trying to pull it out from their pockets? Like, where's the influence and the power in your conversations with the people that are helping to fund your deals?
So it's kind of shifted a little bit. At first, I don't know that pulling out is probably the right. We're not begging, but at first I felt like maybe we were a little bit more like, oh my gosh, is he going to do it? It's been fun. These private lenders are all relational based for the most part. They're not, somebody you've never met before, somebody or somebody who they know, kind of thing. And at first it was more like, man, I really hope they do this. I remember Luke and I would always have an agenda that we would bring to the meeting, even if it's a casual meeting, you want to treat it like a real meeting. And sometimes on the agenda was, pleasantries, order a drink and take a shot. Even that was literally written on the agenda. And then it was, all right, market update, current portfolio update, what we're looking for, break down the deal. So we would have fun with it. But, at first I feel like it was more like us kind of like, oh, please help us. And now it's like, bro, we're offering you 10% return plus a kicker on the back end. Like, if you don't do it, we'll find somebody else that does it. We don't obviously word like that, but it's kind of one of those things where it's definitely beneficial on both sides of it. It's not just, us that benefits. I think our main private lender, before we really kind of started to balloon our private lenders, I think he made like 75 or 80 grand interest in 1 year on that was a passive side thing for him. He met us for drinks, wrote a check, 2 months later we'd meet him for drinks again, write a check back. He would just meet us for drinks, is all he did. And he made 80 grand. So it's something that benefits both sides. You just have to be able to articulate the benefits to the private lender in a, tactful way of, this benefits you not as much as me, but it's darn close. So, it's not going to be you, we'll find somebody else. But we'd like it to be you.
That sounds like it's something that's grown and transitioned as your business grew and your confidence grew and your experience grew. You had value to offer to them, and it wasn't your first deal. So it didn't feel like you were begging for money. So it sounds like, you kind of went on that spectrum of, starting out raising money, I don't want to say desperate, but you wanted to raise capital so you could maximize your return. And now you're at a point where you've got a functioning business that is churning out cash flow and paying dividends to your investors. So it's proven, and you've got something to sell right now. So I think that's interesting to know that transition does happen.
Yeah, it does for sure. It does for sure. And having done deals with them as well as with other people and giving examples of deals and returns is huge.
Yeah, and I also think it sounds like the conversation that you're having with the private money lender is sometimes the same conversation that you're having with the seller when you're trying to do seller financing, kind of explaining the benefits. Like you said, what do they want? Do they want that monthly cash flow? Are they looking for, tax sheltering? All of the same questions. The only difference is the owner finance person is just holding equity and the other person is actually cutting you a check in both. So I think that's really interesting, and I'd never really kind of thought about it that way until you just explained it. So I definitely appreciate that, and I think next year we're definitely going to be trying to do a little bit more private money deals. But with all of your other businesses going on, I was just wondering, like, you have like Grant Cardone out there who says he has his separate businesses to fund his real estate business. Like, have you started doing that and getting away from private money at all because you have a couple other things that are going on? Is that the ultimate goal? Like, where's your business headed with that?
Yeah, right now the goal is growth. So, growing how we are, definitely still planning to use, for at least for the foreseeable future, private lenders. And Grant's a great example. I mean, he's able to fund a lot of his real estate with his sales company that he has, but then he also obviously has Cardone Capital where he raises money still. So it's raising private funds just on a bigger scale with accredited investors. So he still raises money, but that was a perfect example. And we have gotten to that point. Actually, we have the education company that does well, the flipping company that does well. We have our rentals, and we have every month's different, but we have some pretty good months. And I don't necessarily, and Lucas doesn't necessarily, we're not like flashy where we need to buy a Ferrari a month or anything. So we have actually just recently, we just started it about a month ago. We're starting a company that we're funneling 10% of our profit from every company to, that is going to be a diversification play for us. We are structuring it after what Warren Buffett does. So Warren Buffett has his active income, his Berkshire stuff that he like owns and operates, and then he has an investment arm. So he has his active and his passive. His investment wing is, he owns a ton of Apple stock, and he invests in startups that he doesn't actually do anything with. He just buys them out. So that's what we're starting to do. We're calling it Invest Loop. So we're excited about that. And it's going to be a company that we're going to leverage all our lines of credit, our paid off rentals, as well as, income from our other businesses. We're going to start to lend money to people around here and people in the office. So a lot of our team members that are looking to grow rentals, we're going to start to invest in startups. We're not naive or vain enough to think we're going to like run other companies, but we will invest capital into getting an equity share or branding share, whatever they need. So we are going to start to branch out and diversify into non-real estate related things. And we actually have a COO that's running that company. He went from running our flipping company to running that company now. So we are starting to look into that space a little bit, because I don't need to make, as much sometimes as some months that I make. Obviously some months I'd like to make more, but there's some months where like I don't spend that much a month. So I'd rather invest it and push into other things that will eventually grow wealth for me. So we are starting to go down that path, interestingly enough, but it has just been recently.
Well, let's talk about that business a little bit, because I'm curious, because you mentioned Warren Buffett, but I also want to know if you mentioned startups. So in my mind, those are kind of two different things. I want to know what you're looking at with this investment. Are you looking at stable, solid diversification plays with like cash flow businesses that are below value, or are you trying to like hit some moonshots and just like do 100x with some of these investments, or is it something in between? Like what kind of really what kind of deals are we looking at? And do you have any examples of things that like kind of just stand out to you in your mind?
Yeah, yes and no. So I mean, like I said, this is newer. We just got the LLC set up a few weeks ago, so it's nothing we're even funneling any money to. We're just setting things up right now. But yes, to kind of what you said, the plan is, just kind of off the cuff here. This isn't exactly it, but 10% of profit from the other companies will go to it, and a certain percentage of that, we're going to, we have somebody running this company. So rather than, I guess the whole genesis of it was rather than Luke's and I both putting our money in the stock market or crypto or, an e-commerce store that somebody runs for us, rather than us just half-assingly investing this extra money we make, we have somebody in charge of it and we're making it a business that we have control over. So that's, so with that, some of what they're going to be doing is some blue chip stocks, do some research, do some analyzation. We got some, some people, some business analyzers that are going to be analyzing these, and that's their whole job, is to help us analyze and do things that we can't do or time we don't have to spend analyzing, investing money in blue chip stocks and probably some crypto and some e-commerce stores, things that are a little smaller. And then, just an example of, I know we talked to a banker that a lot of people are buying and building car washes. It's kind of almost become the self-storage phase that's kind of near the end, but still there, where people, these big businesses, they look at a population, how many self-storage units are there? Okay, they're short, let's build it, or they're not, let's go somewhere else. People are doing that with car washes now. They're doing that, they're building them, and then they're just selling them off at a very, very low cap rate to some hedge funds. So things like that too as well, we'll look into. And then probably try to do some home runs, invest 50 grand in this startup that we don't really know much about, but if it takes off, it could do really well. So probably not as much of that, but I think we'll sprinkle in that as well. But it's, I guess, the main genesis of it, rather than Luke's and I just half-assingly investing, a lot of money in things that we don't have time to research, we're hiring people to research so they can do it for us.
That's awesome. Well, it sounds like that could end up shaping to be one of the more interesting things that you do, just with the things that are going to come in the door and that you're going to come across. So after 10 years of 10% of your money going to that entity being reinvested, I think it's going to look pretty incredible. That's awesome.
Yeah, I think it'll create some interesting content too as we get going there. So people follow that journey as well. So we'll see. It's kind of been something we talked about for a while, but it's coming to fruition now.
I love it. So speaking of, your content and everything else, and now you have a ton of different businesses, like, let's kind of dive into a little bit about like some of your goals, whether it's your real estate goals, whether it's, your online course or whatever. Like, what's the goals for you personally, and then for like growing your business?
Yeah, so goals are, I think, most people will tell you, obviously pretty important. I think for a while we weren't setting big enough goals, and I'll get to my goals. So we changed that, but I know my original goal was one house a year for 10 years, buy one house a year for 10 years, then start to pay them off. And then it started to grow. And then it was, holy crap, let's try to have $25 million in real estate by 2025, and we're sitting, in 2022 and we have 42 million. So we seem to keep, don't get beating, crushing, whatever these goals that we're setting that maybe seem kind of crazy at the time. So trying to expand our minds and our goals a little bit, and not let, our goals be something that short sides us. Now the goal that are getting pretty wild. So the goal now is to own $1 billion in real estate. And the goal is to bring an MBA team to St. Louis, and then be the top 5 real estate investing, education brands in the country, Bigger Pockets, Rich Dad, Poor Dad, Grant Cardone, Faster Freedom, in those types of spaces. So that's kind of the goals now, is, education be top 5, MBA team to St. Louis for many reasons, which would be crazy. And then, $1 billion in real estate. And, those can take, 10 years or 40 years or never happen, but at least we're shooting for something and we're swinging for the fences.
Yeah, don't skip over that, man. Tell us, like, NBA team St. Louis, like what's the foundation of this goal and this dream? Like, give us some details there.
Yeah, so Luke and I are both from St. Louis. We're big St. Louis guys. It's not the most exciting city. I get it. The weather can suck. There's not a ton to do, but we like it. It's a great city, great people. And it is, great market for buying rentals and flipping. And it's a great, pretty steady market. You don't get the high swings, but you don't get the crazy lows either. So it's something that we're passionate about, St. Louis, and making it better. And an NBA team, A, it'd be badass to own, but B, if the NBA team were ever to go to St. Louis, a sleepy flyover city, it would have to mean that Luke's and I have made a lot of money. We have made a lot of inroads in St. Louis, politically, and, just have made a name for ourselves and had a brand. And we would because the NBA would have to pick St. Louis over some other probably cooler city. So we would have had to done some things that helped the city, and then getting a team would be huge for the city. Financially, it'd be great. It would, create jobs. It would do a lot of different things. We'd be connected. Owning a team, you're connected with other billionaires. It's, you're who you're surrounded by. So if we're surrounded by NBA owners, that'd be pretty cool. So it's kind of just a way to, I guess, wrap your arms around the long goal of creating wealth and creating impact and making, our community better. It's a way, it's kind of like an actual box you can check to say you actually did that by doing this kind of thing. So it's a pretty big goal, but I mean, who knows, crazier stuff's happened. So we'll see.
That's a freaking awesome goal, man. That's a freaking awesome goal. And speaking about helping people, like, what made you start, posting things online, like posting on Instagram and, starting that whole journey where so many people have found you?
Yeah, so we have a local meetup here in St. Louis, a real estate investing meetup. That's part of the reason I tell people to go to them, because I know how powerful ours is. And there's 250 people show up every month, so it's a decent size here in St. Louis. I think it's the biggest one in St. Louis. Sometimes we have more than that, but I was posting on my personal Facebook page about real estate a little bit, and trying to kind of draw people into that. Hey, come to our meetup, all this kind of thing, and it really started to catch people's attention. I was getting bombarded with messages and comments, and getting 300 views on the video, like, oh my gosh, why are this many people interested in this, this 12-unit apartment complex we're buying? I can remember specifically posting about that. And so it just kind of started to gain traction, and people were like, you're doing it, you're explaining it, you're actually doing it. You're not talking about something you used to do, or you don't have, 2 rentals and are trying to write a book. I specifically remember somebody that had done 5 BRRRR deals wrote a BRRRR book, and it just makes me cringe. So, at that point, when I started posting on social media, 2019 on real estate, or personally here on my Facebook page, then 2020 started doing it, on a little bit more of a national outward reaching level. We had, 25 million real estate by that time in businesses. So I felt like I had the right to be posting and telling people what I was doing and how I would suggest them doing it. So that kind of how it started. It just kind of organically gained traction, and then it kind of organically gained traction in general. Most people on social media are known or have a following because they're an actor, right? Or a musician or an athlete. Like, they do something cool, and then people go here to learn more about them. When you're starting on social media, when literally nobody knows your name, it's a slow, long, drawn out process, but people are there for you, and they're there for your content. They're there for what you're teaching. So it's a really, really great audience, really, really high quality. They're not there because they saw me do something else. They're there because they saw me do a video about real estate. So it's been quite the journey, and it's been, it's a pretty cool number, having a couple million of them, but it's also been 24 months of 30 hours a week on my phone, on social media, answering DMs, editing, figuring out why videos did well, didn't do well. I was fortunate enough to have other businesses support me, because I went all in on this education thing in 2020, and I didn't attend a meeting for my flipping company for about 18 months. Then, Lucas was running that. So I was fortunate enough to be able to devote that time, but that's what it takes when you're starting from scratch, and nobody knows you except some big dumb looking idiot that has a weird voice that walks down the stairs with one shoe on, kind of thing. You just got to kind of build it however you can.
That's so cool.
I
That's
like
so
it,
cool.
Sam. So, we've gotten a little bit into your goals. We're getting an NBA team to St. Louis. We're gonna have $1 billion in real estate, top 5 real estate educational platform. Let's talk about your whys. What is really motivating you to set these hairy, audacious, big goals and drive you forward? Like, what's really the driving force behind all this?
Yeah, I mean, of course, I'm, obviously want to mention my family, but that's kind of everybody's why. I get that everybody loves their family, and I do as much or more than anybody. But in general, it's more about just impact. I used to say I wanted to create generational wealth, which is still obviously the case, but it's kind of transformed into the word impact. That just seems to be the word that stuck with me for the past, maybe 6 to 12 months, just creating impact, creating things that outlast you, creating companies and struggling and creating wealth for other people, and, showing other people how they can accomplish things that they don't think they can accomplish, and being able to set up. I used to say, I want to be able to pay for my great grandkids college by what I'm doing now, kind of wealth. But now it's just more creating businesses and things that my great grandkids can be like, yeah, my great grandpa did that kind of thing, or my whatever. So it's just about creating impact, because there comes a certain point where, being able to retire and wanting to retire are very different. Being financially free doesn't mean you don't work anymore. I get the question all the time on TikTok, especially, as you are a liar, you're this, you're that. You wouldn't be on TikTok if you had $42 million in real estate. You'd be sitting on a beach. And I'm not comparing myself to these people, but you think Elon Musk has had to work a day, or Bill Gates, or all these people that are way wealthier than I'll ever be. You don't think that they can stop working too? At a certain point, money's not the reason why you do something anymore, right? Of course, the money's there. I want to make more. I'm not an idiot. I want to create more money for myself and be able to buy a private jet and have 5 vacation homes and all these materialistic things. But it's more about the impact and watching people. And we have 600 rental doors in our office between our team members. Luke's and I own a majority of them, but we have our manager of construction owns 40 rental properties. How cool is that? And he's done all that in the past 5 years. And we have, team members on here that own 5 rentals and 10 rentals. People are literally creating wealth that will last beyond them because of the impact we have here. And now that's kind of taken a national level. So it's just more about the word impact, I guess, than anything else, just creating more impact.
Yeah, I have that conversation with my wife all the time. What does it mean to be retired and like financial independence, retire early? My issue with that whole concept is the fear of not being fulfilled at the end of it. Like retiring just for the sake of retiring, just having nothing to do, just sounds like the most boring thing in the world that anybody can do. So I think that when you've developed these goals like you have, you've designed a life that is going to be purposeful and lasting. So I think that's really meaningful. Talking about impact, though, do you get a lot of satisfaction from being able to hire a lot of people in your team and provide employment opportunities? Because that's not something I've had the privilege of being able to do yet with my business. It's just me, solopreneur currently, but you've built out this business. Do you feel a sense of pride with being able to employ a whole bunch of people in your business?
Jimmy, you know the answer to that. Yes, of course. No, I'm kidding. No, I love, that's a great question, because I got some things I want to say about that. Yeah, I love it. I love growing a team. I know a lot of people don't want that burden, or whatever you would call it, the lift of having people rely on your company and the decisions you make, as well as friends and family, right? That's even a whole nother layer to it. But yeah, that's what I love. I know there's a lot of people that try to get efficient and not hire. I'm not going to hire somebody just to hire them, but one of our goals is 100 employees in the next 2 years, even during a recession and all these things that are happening. So our goal is to grow and hire more people. That the fact that we have over 600 rental units between people in our office, and the fact that we're able to hire people and help them grow their wealth and lend money to them and do things, and not buy every rental that comes across our plates. Let some team members buy them. That is a huge proponent of it. I'm in a national mastermind called Collective Genius, and you have to have 100 rental units or do 100 flips a year to be in it. So some pretty high level people. And even a lot of those people are, kind of worried, and maybe worried about the market and trying to not cut costs, but maybe lay people off here or there to kind of just tighten up. And I just did a presentation last week. Yeah, last week I was there in Florida last week, and the title of my presentation was why we're not laying anybody off because of the economy. So yeah, our goal is to keep the people. We have people here for a reason. If we let them go for some unfortunate reason, we're going to hire somebody to replace them. The goal is not to tighten down the hatches. The goal is to, and we have built our businesses to where we have 6 months of reserve in each business, to where, if I make less money a few months to get through this little dip, then I will, and Lucas will. So the goal is to have a culture, have a team, and have a place where people can come and want to be. We just hired a guy that left his job making $450 grand a year. And not many companies can do that, let alone small real estate investing companies. In the grand scheme of things, we're small. You know, he left a corporate job making 450 grand a year. We hire people that make a few hundred grand a year all the time at our company. And, you know, that's in St. Louis. That's a lot of money. So having that culture and not having that layoff culture and truly wanting your people to be there and grow, it shows. I mean, our culture and our reputation is second to none. And we have people, you know, all the time that I'll take any job as long as I can just get in those doors, because I see what happens to people that come through your doors and work with you and for you, their lives change. So yeah, that's a huge proponent of it that I probably didn't get into with impact, but it's kind of that more localized impact when I was talking about impact earlier.
Yeah, it sounds like, you know, people are just really inspired and motivated, you know, just by, like you said, from what they see online, from what they're hearing, from what they're witnessing in the local market, in the area, with the people that work for your company, going and talking to their families. Like you said, I mean, I I absolutely love that. I wish more people were like that, more bosses were like that, more owners were like that. You know, that's the exact kind of person that I'm shooting to be. You know, for me, you're an inspiration for the type of business that I want to run. You know, but with that being said, you know, you talked about, you mentioned the economy there for a little bit, you know, so not just specifically with, you know, your business and the people at your business, but what obstacles do you see yourself facing, let's just say over the next, you know, 2 years in running your business specifically with real estate?
Yeah, it's going to be an interesting 2 years. So I think one big thing to keep in mind is, you know, having some perspective. I remember when I got started and we probably didn't start actually flipping houses till like maybe 2016. And the goal was sell a house in 30 to 45 days. You know, if within 21 days you haven't got an offer, drop the price 5 grand and do that until you sell. And like now that like makes people want to throw up in their mouths. Oh, I didn't get 10 offers on opening weekend. You know, I'm going to lose. So just having some perspective, knowing that, you know, a little more normalcy is okay and a good thing, and not, you know, thinking that, you know, you can overpay and over rehab and still make 50 grand. Those days are over, and that's probably a good thing. So just having some perspective that there's going to be some leaner years. I've talked to several people that were around in 2008, 9, and 10, and they still made money. They didn't make as much, but they still made money. Their employees made money. And if you set yourself up, like I feel like we have with, you know, 6 months of bare bones reserved in reserves in each company and multiple streams, so that if, you know, one doesn't hit one month, us as owners aren't, you know, out of money, you know, we can take that hit. And we lost money a couple months this year in the flipping company, and that is what it is. You know, we got rid of a ton of bad inventory, and now we're sitting pretty good. So we're going to have a great December. So I think just some perspective and just knowing that it is going to get harder. You know, fortunately, that's part of the reason we have the Invest Loop company, as well as the education company, as well as the, you know, flipping company, having multiple streams so that we can keep another one afloat if we need to, because it's just going to be a little bit harder going forward. But everybody thinks that what's happening now is the worst ever, or we're living the worst society ever. People in 1990 thought, you know, this was the worst ever. And people in 1800s, everybody thinks that they live in the worst economy ever, and the world's getting ready to end, and technology is going to take over, and, you know, everything, the worst is happening. But humanity lives on, businesses live on. So we're just going to keep pushing forward. And we read books that I remember just reading a book, what is it? Built to Last by Jim Collins. Ford lost billions of dollars in the 80s, and they're still around. So it's just one of those things where as long as you don't give up, you'll win. And we look at that personally and in business.
I think that's great, you know, advice. Don't get over your skis. And I've been hearing this a lot from more people recently. You know, maybe a year and a half, 2 years ago, people were just deploying capital like crazy. But now people are really intentionally building up reserves, waiting for, maybe preparing for a rainy day. So, you know, I've seen that sentiment across the board. A lot of times it's because they just can't find the right deals to get into anyway. So like cash flow is still coming up. So they're stacking up cash anyways. You know, break out your crystal ball for us, man. Like, where do you think the market is really going? Real estate wise, like in my market, it's been pretty horizontal. Like we haven't seen any significant drops at all, but I've been hearing you know, some other metropolitan areas, they might be, you know, feeling a little bit more stress. You know, where do you think we're really going in the real estate field?
Yeah, so I obviously, you know, I try to be a little more optimistic than pessimistic, but also have some realism in there as well. And I wish I had that crystal ball, but kind of what I'm seeing and hearing is, yeah, of course it's going to, pull back. It's literally the Fed is forcing it to pull back. That is the entire reason they are raising interest rates, is to curb inflation and curb the real estate market. That it's intentional. Just in '08, it was like an uncontrollable free fall. In 2022, it's a controlled fender bender, in my opinion. It's just something that they are controlling. And I believe Jerome Powell even said himself that I have several levers to pull to fix a recession. I only have one lever to pull to fix inflation, and that's interest rates. So it's going to dip. It has to dip. Interest rates are going to go up until it dips. That being said, I think we're at or near the top. I think interest rates maybe another bump or two, and it'll probably kind of crush the real estate industry a little bit. Not like it was in '08. We had this ginormous spike up, but supply was lower than it has been ever. Therefore, not as many people transacted. So if it does dip more than I think it's going to dip, there are much less people caught with their pants down than they were in '06, 5, 4, 5, 6, 7, where everybody was buying and, millions of people caught with their pants down. So, not as many people have transacted because supply is low. Supply is still 10 million units low, or whatever the heck the number is. So I think it's going to pull back. I think it's going to be a little bit of rough waters. I think we're going to get into some more up, down 5% in some markets, but I don't see anything more drastic than that. And, for most markets, I think it's going to remain pretty steady. I think your Phoenixes and your Miamis and your Californias are going to get hit a little bit harder, but nothing like '08. And like anything else, it's never a bad time to buy a good deal, and you can always refinance. You could literally hit a grand slam with your eyes closed the last couple of years, and that's not normal. So I just think, just knowing that you're still going to be able to get deals, but you're not going to be able to cash flow as much, or you're not going to have as much equity. It's still a good investment.
At the end of the day, who the hell knows? But be prepared, have cash, buy good assets, and do that over a long period of time, as you've shown. And things just kind of seem to work out with real estate. So be patient.
For sure.
Yeah. And I wanted to ask, before we get into our last segment of the show, are you, with everything that's going on with real estate right now, are you and your company seeing more opportunities coming in the multifamily apartment side or in the single family side? Because the interest rates are high, inventory's low, and most people aren't able to qualify for some of these properties. Or are you seeing opportunities in multifamily where people who purchased 4 or 5 years ago are now coming due on their 5-year balloons, and maybe they bought at 3% and it's going to 5 or 6%, and they might not be able to refi and are selling? Like, where are you thinking the more opportunities are going to be out there over the next year and a half?
Yeah, good question. I think it's going to be a little bit of mixture, and I've seen a little bit of a mixture. I have seen more multifamily opportunities recently, just because I think brokers are saying, I can get you X, and the seller's like, no way. And he's like, well, let me list it, and nobody's buying because they can't get X. They're just trying to get the listing. Because from what I can tell, and talking to some bankers about this, appraisers have not adjusted for the higher interest rates, so cap rates are still lower than they should be. So I think there's opportunity in multifamily, I guess, but I think the sellers have to kind of come, back on their number a little bit and realize that cap rates have gone up a little bit just because interest rates, the cost of money is more. So I think there's going to be some opportunities, but I think the fact that in the single family game and multifamily game, there's been so much equity created. Cap rates were so low there for a while. So people have all this equity. A good investor, single family or multifamily, their balloon comes up, or, they're looking to sell. They have all that equity. Even with the prices dipping a little bit, they can refinance or they pull out some cash or bring somebody in on it. It's not like in '08 where their equity disappeared overnight, liquidity disappeared overnight, and people, were stuck with no option but to get rid of it or foreclose it. People have a lot more options now in general, because the loans that were given to people were good loans. People don't talk a ton about, even multifamily loans were kind of a sham back then. So loans have been a lot better recently. That 5-year arm that's up was given to a pretty qualified borrower, I think. So they'll figure it out and they'll just pull out some cash to make up the difference. But I do think there'll be more opportunities because there will be some more strain than there has been. So I think it's just one of those things will be deal by deal specific, but you can probably snag something, but then you got to be careful on your end because paying, 6.5%, 7% interest is a lot different than paying 4% on a multifamily for sure.
Exactly. Well, last question. All right. What would be your number one piece of advice for somebody wanting to take action? It's the beginning of January 2023, and they want to go out there and get their first deal. What would be the number one piece of actionable, advice that you would give them?
Number one piece would be go to join your local community, join your local Facebook groups, join your local real estate investing meetups. You have to lean on other people in this industry. The real estate investing industry is surprisingly small and surprisingly helpful. So join your local meetups. You'd be shocked. You go talk to somebody. You might be sitting next to somebody that has 20 rentals and they'll gladly meet you next week and take you through the rentals and show you how they bought them. Like you'd be shocked at how many people are willing to help in real estate. Part of it's vanity. Hey, look at how cool I am. And part of it's people really want to help. So you're not going to be successful unless you're connected with people in your market. You need people to buy houses from, sell houses to, insure your houses, create your LLCs, fund your deals, all those things. Contractors work on your projects, all of those people that is daunting for you to how the hell am I going to meet all these people? Well, they all meet once a month at your local meetup or they all are on your local Facebook group. So number one actionable, like tactical thing would be go meet people, whether it be online or in person and just up your Rolodex. You can literally up your Rolodex overnight, but you just got to be willing to do it.
Exactly. That James and I met at a meetup. That's how we got started. I've met so many great people at meetups. Reach out. I love that piece of advice. All right. Well, it's time to get into our last segment of the show that James and I like to call the Big Four. James, take it away.
4 hard-hitting questions. Let's do it. All right, Sam. So we call this one our FI hack, financial independence hack. What's something that you do day to day, maybe in your business, personally, that just kind of feels like a hack or a cheat code for your path towards financial independence?
Yeah, I think the cheat code that I have is there are a few of them. I won't go the private lender borrowing money route. Of course, that's a huge one. Being able to own $40 million in real estate without using any of your own money, it feels like kind of like I'm playing Monopoly, but with real life. But I think it's probably just me being a crazy psycho and just not giving up on anything. Like I've done so many things that I didn't think I could do just because I didn't give up. It sounds simple and it may sound stupid, but literally, if you keep trying, you will be successful. It might take you 2 months. It might take you 20 years. It might take you 2 years, but I just don't give up on things, whether it be social media, whether it be my business, whether it be anything. But if I keep trying and don't stop, I will be successful. It sounds so simple. That's why it's a cheat code, but so many people aren't willing to do it. They give up because they need that immediate gratification or they need, they need to see results right away, but they're not willing to continue to keep going. So literally you can almost have anything you want if you just don't stop, but so many people stop. It's one of those things that it's so powerful yet so simple. That's probably why it's so powerful. People try to overcomplicate it, but success is just doing the same thing over and over again and not expecting immediate results.
Man, you sound like the spokesperson for our hats right now. Decide, commit, and take action. Like it's so simple, but that's really all you got to do is keep going and going and going. All right, man. We call this next one resources. So, are there any books, podcasts, or people besides yourself that you think our listeners should go out and read, go start following, or go start listening to that would benefit them on their financial independence journey?
I mean, yes. So want to just quickly frame it with, everybody's got a different person. There's people that hate me and think I'm super annoying, and that's fine. So I just think going out and being willing to follow several people and, pick a few that you connect with is extremely important. But as far as books go, like I like to get my active knowledge from, podcasts and YouTubes and, watching people like that and listening, Bigger Pockets is, I don't like it as much as Brandon left. I was actually on there over the summer, but it was right after Brandon left, which kind of stinks, but Bigger Pockets is great. But then my books is where I get my mindset things. Like I love, like Eat That Frog is a book that I love. It's about doing the hardest thing of the day at the beginning of the day, and the mental win that you get. Everything else is a downhill slide, and you can crush it if you don't put off things. And just stuff like that, and pitch anything, framing conversations to in your direction. So those are some books that I really like, and I love all the Jim Collins stuff that he has. Jim Collins is Good to Great. Something about Turn the Flywheel, and then right now we're reading Built to Last. So I love all those resources, but I think in general it's just go out and just follow several people, and if somebody annoys you, just unfollow them, but that doesn't mean unfollow that path that you're on. Just find somebody else.
What podcast are you listening to that's not mindset or real estate related? Like just one that you enjoy that you put on besides the mindset and business stuff.
Almost every single day I listen to The Herd with Colin Cowherd. So I'm a big Colin Cowherd guy. He was on ESPN, now he's on Fox. So I like listening to his stuff. So yeah, I'll listen to the best of The Herd most days, kind of debriefing going home, because I'd like to just pretty much go all day. So kind of my non business related thing is the sports talk show or sports podcast.
Love it.
All right, Sam. Future you, man. I want you to paint a picture, either in your business, personally. You gave us a little bit about your goals and what you're trying to accomplish, but I want you to paint a picture of you 5 years from now. Like, where's Sam at in his life? Where's Sam at in business?
Yeah, 5 years from now, I'm the first thing that comes to my mind is my daughter's being older. I have a 6-year-old and an 8-month-old. So them being a little bit older, and having a few vacation houses and a jet that we can jot to on a weekend if we're on a Friday, picking up my daughter from school early and hopping on the jet and head down to Florida. So things like that. So just having the ability to do more things and spur of the moment things with my family is the first thing that comes to mind. And then the second thing is just having, a few hundred employees and a big ass office building. Right now I'm in a 25,000 square foot office building that we bought and remodeled that is our home now, but continuing to grow and, to buy another building to redo. So my mind goes to, being able to do crazy things that very few people can do with your family. And then, having a major business that's doing quite a few things. I don't think I'm going to ring the bell on the stock exchange, but you never know.
Love it. That sounds like an awesome future. And we know we're going to have you back to talk about all of those things. So for everyone listening that wants to reach out, wants to find you, if they haven't already found you, where's the best place for people to find you and reach out?
Yeah. So I always kind of tell people, most people aren't on every single social media app. So whatever your top 2 or 3, I'm on them. So just at Sam Faster Freedom on TikTok, YouTube, Instagram, Facebook, Twitter, all those places. Just give me a follow. I got a podcast called The Faster Freedom Show, just started about 3 months ago, and it's doing pretty well. And me and my business partner, Luke's, is the only time that we do content together. We chop it up, make fun of each other. So it's an interesting listen. Luke's is getting ready to rap on our 50th episode. He's been talking about it, so he's going to freestyle rap for everybody. He's got a rap background. So that'll be interesting. But yeah, just follow me on social media. And if you want to message me on Instagram, I'd be glad to respond. I responded to you, Patrick, when you sent me a message. So hit me up on Instagram if you want a further conversation or know anything else about what I offer.
Wow, that 50th episode is going to be terrible or great. I'm going to make sure to tune in for that one.
You should record it next week, so it'll be out probably the beginning of the year. We're not super far ahead on our recording, so he's got half of it written. So we'll see. We got to get a nice beat for him to rap to. So
I love it. Well, it sounds like you guys love to have a lot of fun. We do too. So you guys know what to do. If you like this episode, if you hated this episode, leave us a review. That's all we're working for here, guys. So Google, Spotify, YouTube, any of those, drop a follow, drop a review, and we'll catch you next time. See ya.
See you guys.
Thank you for listening to the Real FI podcast, where you learn from the investors that have lived the hard lessons for you. To connect with us during your pursuit of financial independence, be sure to join our community by following us on Instagram or emailing us at info@therealfi.com. If this content made you financially, mentally, physically, or spiritually richer, please make sure to leave us a positive review on your preferred content platform. Cheers to kicking the 9 to 5.